Well, hello, welcome back to the channel. Hope you had a great Labor Day weekend because in this video, we're talking production targets, margin goals, and the sweet hum of NIO's latest earnings call. And let me tell you, it was a full-blown data storm. NIO's second quarter earnings call gave us a ton of insight into where the company is headed, and spoiler alert, they're revving up for a high-speed run into Q4 and 2026. Let's kick things off with some momentum updates. NIO says its core models, the ET5, ET5 Touring, ES6, and EC6, are seeing strong signs of demand. The big move to standardize the 100 kilowatt-hour long-range battery pack across these models? Turns out it didn't dent gross margins or transaction prices. That's partly because previous promotional discounts were pulled back, so it's more of a strategic reset than a costly upgrade. Looking ahead, NIO is projecting quarterly R&D spending of 2 to 2.5 billion renminbi in 2026. That's a strong commitment to staying competitive, though it could shift depending on how many new models they push out. Don't expect major hardware changes for core models in 2026, though. NIO says these vehicles have already been upgraded to their latest intelligent platforms, and their competitiveness is expected to hold. There might be some special editions, I think Champion Edition, styling updates, but no full revamps. Now let's talk about the brands under the NIO umbrella. Firefly, NIO's budget-conscious brand, won't be launching a second model next year. Meanwhile, Onvo, their mass market label, is experiencing booming demand, especially for the L60, which saw record orders in August. So what are NIO's Q4 goals? Well, they expect to sell a whopping 56,000 vehicles per month, with the L90 model hitting 15,000 units of monthly capacity by October. The all-new ES8 is also ramping up. NIO's targeting 10,000 units in October and 15,000 by December. They're clearly throwing everything they've got at meeting their Q4 delivery target of 150,000 vehicles, or about 50,000 per month. On the financial side, the company's break-even target for quarter 4 is based on non-GAAP measures, and they're sharpening their pencils. They want to cut SG&A to sales below 10% and hit vehicle margins of 16 to 17% to make it all work. Premium models like the L90 and ES8 are expected to deliver 20% gross margins, which could be a key lever in getting NIO over that profitability line for the first time. And let's not forget the financial progress. Operating losses narrowed over 30% quarter on quarter in Q2, showing that cost optimization efforts are paying off and fast. So, where does this leave NIO? In short, laser focused on Q4 with a huge production targets, a well-defined margin game plan, and a growing multi-brand strategy. NIO is pulling out all the stops to hit profitability. They're not just playing the EV game, they're trying to redefine the rulebook. That's it for this high voltage update on NIO. If you found this breakdown helpful, go ahead and hit that like button like it's an accelerator pedal, and subscribe for more EV news, earnings deep dives, and all things electric. Catch you in the next one, and as always, keep it charged.